Welcome to Endgame Finance. Today, guys, we have a lot of new development regarding Rivian. Rivian basically took a major beating this week. Stock is down over 30%. And today I want to go over why exactly this is happening. And I want to go over their financial results from the previous quarter. And I want to talk about why people panicked and panic sold this stock so badly. First, we have Elon Musk kicking Rivian while they are down. Elon Musk is basically questioning whether Rivian will survive in the future. He's saying the trajectory has them bankrupt in 6 quarters. So basically, Elon Musk is saying by 2026, Rivian will not exist, and it really hurts them, even potentially discouraging some customers from buying their products because, oh look, Elon Musk told us Rivian is going bankrupt, so maybe we shouldn't buy, maybe we should wait. And same goes for analysts and investors and investment banks and hedge funds. Basically, everyone listens to Elon. He's a genius. He's built several businesses. Let's shift focus and look some of their financials and some of the numbers overall from this quarter. If they are profitable by quarter four, they will be able to restructure some of their debt with lower interest rates. So it's really important for Rivian not to raise cash right now. That would be the stupidest thing this company could do. If they had another cash raise to dilute the current shareholders, it will basically tank this stock to $5. And as a shareholder, and I remain a shareholder, I say this would be terrible. Rivian also reiterated the launch of R2 is on March 7. Even more is riding on this now, and the same earnings call they mentioned R2 as the future of the company. So basically they're betting everything they have on R2. Margins looked really bad in the previous quarter, but that's because of Amazon vans. They were not delivered, and Amazon vans are actually probably profitable for Rivian. So not delivering those vans in quarter four made their production costs look a lot higher than they actually are going forward. Planning 30% plant efficiency in the second half of 2024. That's really the reason their guidance was so low. So Rivian guided for 57,000 units to be built this year. That's about the same number as last year. So a lot of people are very upset that Rivian did not raise their guidance. I think, in my opinion, they should have at least tried to at least increase that by 10%. I mean, round it up to at least 60,000 or 65,000. Show the investors that you're still pushing as hard as you can. And I bet they will be able to blow through 57,000 units this year. They like to under promise and over deliver. However, now is not the time for that. However, the reason why Rivian is only building 57,000 units this year is because they're revamping their entire factory. They're negotiating with all their suppliers. They're renegotiating with a lot of battery material producers. So they're going to bring the costs down drastically in the following year. They don't want to build out too many trucks in the first quarter or even second quarter. Second quarter, they will not be able to, since factory will be shut down. However, first quarter, they don't want to build too many units because they'll be just standing and waiting on the lot while the parts are still being made from all these different restructuring of the factory. Rivian is really emphasizing this partnership with suppliers that will reduce their costs. And now that they've reached scale, they've pushed out close to 60,000 units last year, and they will push probably over 60,000 units this year, and maybe even double that next year. So they're getting some real negotiating power, and they're using it to renegotiate with all their suppliers. So now Rivian is going into detail how they will actually reduce costs so they don't have to raise cash or go into borrowing money from capital markets. They're saying 50% of the cost reduction will come from material cost reduction. So these material cost reductions will come from R1 engineering design changes, commercial supplier negotiations, and lower raw material costs. In case you guys are not following, lithium prices have really dropped drastically. So cost of batteries will be a lot less, and batteries are some of the majority cost in these EVs. So they have lower battery costs, they are renegotiating with all their suppliers, and they're making these engineering design changes. So basically this shutdown will actually increase their production rate by 30%. So that's really the reason they're not making as many vehicles this year. They will basically build the entirety of these 57,000, or at least vast majority of those 57,000 units in the second half of the year. So they will push out in 2 quarters what they basically did in 4 quarters last year. if you consider this interruption with the factory shutdown. So this is not a terrible news. Basically, they are increasing their production still, but they can't go really fast because everything is really dependent on this factory shutdown that will implement all these changes and all these cost reductions. The CEO, RJ Scaringe, has indicated that R2 is basically going to be heavily influenced by these new design changes. So R2 is really dependent on these design factory changes in second quarter of this year. So they cannot start production of R2 or even the factory that builds R2 just because they have to see if this succeeds or not. Maybe they will not be able to implement these changes and everything will just collapse. Also, another contributor towards profitability is non-vehicle revenue. So services such as things like servicing the vehicle, accessories, finance, insurance, and other software-enabled cash revenue streams are coming to Rivian. They have over 71,000 vehicles on the road that's already generating some of this money. However, more is coming, especially once they open their charging network to everyone else. As they slowly build it out, they will be getting more and more revenues from other EVs. Another advice from Elon Musk, he says Rivian needs to cut costs massively and exec team needs to live in the factory or they will die. What I think the exec team does actually live in the factory. I wouldn't be surprised if RJ Scaringe has a bed somewhere in the factory where he naps. If he ever sleeps, the guy always looks like he's just working 20 hours a day. So that's not really the issue, but they did have excessive costs in their management. And I think these layoffs were actually really positive for the company. I think company was really bloated, and I've mentioned this in the past, looking over their financials. They were just losing a lot of money on stock compensation and all these salaries. And this really needed to be cut drastically. They're not a private company anymore with unlimited funding in just the early stages where losses are acceptable. Now they're a real company. They're a multi-billion-dollar revenue company, and they're now starting to act like it. Now, this is an article I came across I really want to discuss. Tesla investor shows love for battered Rivian. 4 reasons why he's positive about the EV maker. So Tesla investor Gary Black basically says Rivian has the potential to be the #2 electric vehicle maker after Elon Musk's Tesla. Black called upon Tesla investors to root for strong #2 non-ICE players to help the company to accelerate the world's transition to sustainable energy. The fund manager said Rivian has a high quality product, really good brand recognition, execution skills, and a lack of legacy of ICE baggage and competitive conditioning. So basically this ICE baggage is all of these other traditional companies like Ford and GM, they have billions and billions of dollars in debt. Some of them even have tens or hundreds of billions of dollars in debt. So it's really difficult for them to switch to EVs because they have to keep making vehicles that are extremely profitable so they can keep servicing this debt. Rivian can happily coexist with Tesla to be that strong #2 player by 2030, he said. Rivian brand took a top honors in owner satisfaction, with 88% of the customers saying they would buy it again. Black also said Rivian competes in just pickups and SUVs, the auto industry's 2 most profitable segments. Now let's see what he has to say about the cash position. The EV maker will likely be gross margin positive by the 4th quarter of this year, Black said, adding that the company's cash bleed will drop significantly exiting 2024. The California-based company has never had any trouble raising capital, the fund manager said. He also noted the company has $9.4 billion in cash and marketable securities. So basically he's saying the company will be able to raise cash no matter what. They will be able to actually increase their debt holdings or just issue even more shares. But like I said, this is a really bad idea to do at this time. I want to talk to you about the most interesting point he made. There's a huge M&A probability. Black also flagged the probability of Rivian electric delivery van customer Amazon buying the company. Even at 50% premium, Amazon can buy Rivian out for a rounding error. Now, Amazon owns close to 20% of this company, so at a price at $30 per share, around $30 billion for the entire company, Amazon roughly have to pay only $15 billion if they have to buy up that remaining 80%, plus Rivian has around $10 billion in cash. So Amazon could potentially buy out Rivian for $30 per share. I'm hoping this doesn't really happen because I think Rivian has a much higher potential. However, if Rivian board thinks this is in the best interest of shareholders, then they might actually sell to Amazon. And Amazon would probably buy this out with all stock purchase. They would just swap shares. It will not dilute Amazon more than not even probably 1%. So guys, let me know if you think Amazon should buy out Rivian or if Rivian should remain standalone company with some backing by Amazon. The upcoming catalyst is Rivian shares currently traded 1.5 times 2023 earnings compared to Tesla's 6.2. He also sees the upcoming R2 launch to be a key catalyst. The R2 second gen platform will put Rivian into the $45,000 to $50,000 segment. Now, another potential play for an acquisition of Rivian would be Tesla. Tesla could actually acquire Rivian with pretty much close to the same deal. They will give them $20 billion in equity and they will probably just swap shares. However, I really doubt that Rivian wants to be sold to Tesla. However, Elon Musk might stage a hostile takeover at this point. He might be able to convince enough directors basically to sell him the company so he takes over at the helm. And if he does, like I mentioned in the beginning of the video, he has tremendous PR alone. He can just, by attempting to buy this company, launch their shares into $80 to $100 range. So, however, it's a possibility that Tesla might acquire them. However, any acquisition will really depend on RJ's current. I believe RJ has special shares that give him a higher percentage of voting power regarding the company. So it will really depend on him, and he will do whatever is in the best interest of shareholders. So it's very interesting. Rivian might actually get acquired if they continue just to perform, or at least they're perceived to be performing so badly. However, I see them really accelerating in the future. Now, myself, I took a pretty big loss on this company on shares this week. I did not sell any shares. I might be buying some in the near future. However, I'm very confident just holding this position. Like I said in previous videos, this year will be the hardest, most difficult year for the company. If you can hold out this year and they actually deliver on all the results, Rivian will just be a tremendous player in the EV market industry. So guys, let me know what you think. Do you think Rivian is going bankrupt? Do you think they're getting acquired? Or do you think they will manage to survive and thrive in this industry? Let me know below. Guys, like, subscribe, and as always, have a great day.